Hey everyone, we're going to do a little bit of a different episode today. Our country's in the midst of the COVID-19 crisis, the economy's up and down, and we've done plenty of content on how that affects your finances and your future. That having been said, we're going to have a bit of a fun episode today we call Speed Dating with Sound Financial Group. Hello, and thank you for joining Your Business, Your Wealth. My name is Paul Adams. I am CEO and founder of Sound Financial Group. I'm joined by my business partner and one of the best guys in the world to have as a friend and as a business partner, Cory Shepard. So glad you could be here, especially to supervise this episode.
And I'm excited to be here. I'm excited to be your personal sous vide consultant. You know, your wife was sending some texts last night. It looks like you had a really good steak dinner, and she used just enough butter in that bag to get by. I would have probably gone with 2 sticks. One is just enough, but I'm glad good. And
for those of you that don't know, Cory is one of the most incredible non-professional chefs I've ever been around, and he could probably go pro. He just loves helping all of you too much to do that. So today what we're going to be covering is speed dating with Sound Financial Group. Cory, do you want to kind of set up what caused us to have this episode today?
So we recently was in touch with someone who reached out as a part of some of our marketing efforts, and he emailed me a list of questions, interviewing us about who we are and what we do. Now, it's a pretty long list. It would be a fairly boring email to write and send back, but we thought we could have a little fun with this and turn it into a speed dating session, because him sending that email means that some other folks are having those same questions. It'll probably happen again. And so we're going to answer a whole bunch of questions that you might have been wondering about or hadn't even thought to ask about Sound Financial Group and who we are and how we run our business. And then we'll be able to send it to our new friend who sent us the email, but you all get to have access to this info as well and share it with some folks. So
for all of you, think about this. This gentleman sent in 30 questions. Now, he's gathered these from, maybe all over the web, consolidating a bunch of the different lists that you see about questions to ask a financial advisor. And so what we're going to do is go through each of them, try to give everyone the most concise answer we can, helping all of you learn something new about money and, more importantly, about financial decision making, while also answering all of this gentleman's questions without Cory having to write a 6-page long email. So with that, we're going to jump right into it. Cory, why don't we start off? His first question is, what agency or agencies oversee your business? And I'll take this first one, which is, right now, we are supervised by the states in which we do business, or what's called a state chartered registered investment advisor, located with primary headquarters in Washington State. Now, later this year, we think we're going to reach the level of Securities Exchange Commission registration, which is a national registration and prevents us from having to do all of the individual states. Now, Cory, question 2 is, and I think I've got something to say about it after, what professional designations are you holding now?
So I have a CFP and a CHFC, and we kind of have a divide and conquer strategy in this firm. So for a lot of reasons, I went and got a bunch of these designations. Now, just for the sake of my partner, I want you to know Paul Adams has read more about practically anything than practically anyone. So that's part of why I just went and got some of those letters after my name. Plus, I wanted to catch up to my wife, who's an MD. But Paul, I like your perspective on some of these designations, so go for it.
Well, one of my favorites about the designations is that it comes from this societal want to appeal and make evidence by authority. You see, what you don't want to do is take any planner's opinion about any strategy you would use. You want to see indisputable math and independent scholarship for any decision you'd make. By saying somebody has a certain level of education or letters behind their name, it could put you in the position to simply trust rather than making sure you're making good, solid assessments. Now, that was a close one.
Oh, yeah.
That was a close one.
I was expecting it.
So one of the things we're doing is Jordan, our video engineer, is running a clock behind us on all of these. As a result, if we go over 1 minute, the buzzer sounds and we have to be done with that one. So Cory, I'm going to ask you this next one and let you answer. May I contact your current clients and have their phone numbers?
Which is really a question asking for references. And the answer is no. And part of it is client confidentiality. And we have done this in the past, gone to the trouble of asking some of our clients, could someone contact you? Do you have permission to do this? But we really haven't ever had anyone get followed up on. And part of the problem is we'd be dummies to give you the names and numbers of anyone who'd say anything but wonderful things about us. That's the problem with professional references across the board. We just don't think it's helpful. That's why we do what we do here, this podcast, all of our content, so that you can get a sense of who we are and get a sense of the community that we're a part of.
And it does leave the hurdle pretty low. Anytime you're asking for references, it puts you in a position that you've just cleared the lower intelligence bar of that I'm not dumb enough to give you people that would say bad things about me.
And anybody who's been around for more than a day can find, their mom will give you a review. That was worth it.
Cory buzzed out. Finish the sentence since you got stepped on.
Your mom will give you a good review, or your cousin, right? So, Paul, number 4, what would you suggest me or other people do in this financial crisis that we're facing now?
Well, it's very simple. It depends on your aims. It depends on what you want to achieve in your financial life, because not all recommendations are the same. Nearly every client is entirely unique. Someone may have a highly concentrated equity portfolio, and given some of their objectives, perhaps they need to be academically allocated or globally diversified. Or maybe somebody has $2 million and they have no volatility buffer in their financial life. And so maybe they need to take some of that money off to live on for the next year or two as the market rebounds, leaving the rest of their money positioned in equities. The answer is it will depend upon your unique situation of what your aims are. It's not just a math formula. Okay, Cory, I'm going to give you the next question. What type of financial advisor are you?
Now, this question could be going in a lot of different directions. We're really nice, for one, but 2, we are wide scale, strategy level, holistic financial advisors. We don't hone in on one specific product over another. And I would add that we're very aware that money isn't math. It's math plus human behavior. So we have the numbers equations and we have the human equations, and the human equations have to get solved first, because the numbers by themselves are relatively simple math, but the human element is what makes it complex. And we pay a great deal of attention, take good care with that. Paul, do you receive any bonuses or incentive for investments recommended?
It's a great question. As a firm, we've done 2 things. One is we've moved every advisor to a salary and bonus structure. And one thing that happens is even certain products that have to have commissions associated with them, I'll talk about that in a second, that falls to Sound Financial Group, the corporation. The first year commissions do not change any of the salary compensation of any of our advisors, so as to remove some of that, what could be a perverse incentive. But second is that we only use commission-based tools, financial tools, in those areas where we can't get away from being commission-based. Things like life insurance and disability insurance, but we're fully disclosive to our clients on the fact that those do drive revenue for us, or would have to drive revenue for somebody else, even if we refer it out. So the clients that choose to implement those products with us. Cory, number 7, how are you paid?
So really extending what Paul was just talking about, we both have the capacity to charge a consulting fee on the front end for clients that want to just engage us like they would any other professional they might hire on a contract. We also can operate investment management accounts where we have an annual asset management fee as a percentage. And then if there's a product that you can't get away from commission, because like life insurance or disability insurance, that's just built into how the product works, then we do get paid a commission on that. But none of our advisors receive an incentive for recommending one investment over another. That's very leveled out. Paul, question 8. What type of services do you provide?
So I think probably one of the easiest ways to look at this is if you look at, say, the person who's with big box financial retail. Picture any of the major names that you see on the sides of buildings or you see commercials for. Those advisors have an incredible amount of compliance lockdown on the things that they can advise on or recommend to their clients. And that seems to be very closely associated. The things that they can advise on or recommend to clients are all things that those financial institutions that they work for sell. As an independent registered investment advisor, we give our advisors great latitude in being able to advise you on those things that are concerns to you. It might be your 401k, which we may not be able to directly manage if you're working for a large employer whose plan we don't manage. It may be real estate holdings. It might be estate planning strategy that we then get you in front of an attorney to be able to implement that strategy. All of those things considered, it depends on your aims and what you want from your future. Cory, do you have, number 9, any disclosable events? That's where a complaint has risen to the level of the Securities Exchange Commission or the state governing authorities. And what were the results?
So the answer is no. And you can look up, Paul and I both on websites like FINRA Broker Check or the SEC Advisor website, and actually a surprising amount of our personal life and history is public online. And what you won't find is any open or closed events with those governing bodies. So are we perfect? Have we had to say to a client, sorry, I emailed you a little bit late on this, or, we need to circle back around and get another signature because we missed this on this form? Well, no, we're not perfect, but we've never had a complaint open in a formal governing body. Paul, number 10, are you a fiduciary or do you operate under a suitability standard?
It's a great question, and one that nearly every advisor needs to answer. And unfortunately, I think most advisors who hold out their shield of I'm a fiduciary are not necessarily doing the things that you as a consumer would say is to the fiduciary standard. I'll give you a quick for instance. How many asset management firms that when you reach out to them and say, hey, I need full-scale financial advising and planning, et cetera, if you were to ask like, well, are you guys able to advise me on my real estate? You're probably going to get a no. Well, are you guys able to take care of my life or disability insurance? The answer is no. And it's because they're literally saying that those things that they don't directly handle as an investment fiduciary, they are not a fiduciary for. In our case, not only do we operate on the fiduciary standard, but we encourage our clients to be their own fiduciary. You can actually find that podcast episode from us in the past where we covered that in detail and how you as the consumer want to be the most responsible party in the conversation with your advisor and hold them and you to the fiduciary standard. Okay, Cory. Number 11, who is your typical client?
So Sound Financial Group works with a wide variety of folks, although we do have some focuses. So physicians, tech executives, and the entrepreneur business owner are the 3 areas that we have a major focus in where many of our clients sit. And then on a broader scale, many of our clients are in the 300,000 to 2.5 million of annual household income range. Notice I didn't say investable assets. I said income because doctors being a great example, they can come out of their training with a high level of income and no assets yet. And we want to be able to help them get to the point that they can build those assets. So income being one of our most valuable assets, we want to help folks even if that's all that they have currently. Paul, anything to add there?
One point is that as an alignment conversation is the first conversation we have with a client. And I invite you to hear that conversation and apply. If you're a fit, we will let you know. Whew, that was close. 1 second to spare.
Yeah.
All right.
Paul, what licenses do you carry?
Okay, so I have licenses that I no longer carry, like a Series 24, a Series 7, because they don't apply to us working on an independent registered investment advisory model. Yeah. But that being the case, we have a Series 65, life insurance licensed, health insurance licensed, and in appropriate states, Cory is long-term care insurance endorsed, so that when those products are important for our clients, we're able to secure those. Cory,
right.
How do you ensure your clients are protected from fraud?
This is what I call the Bernie Madoff question. And since that event in our financial history, we have what's called a custodian as the third party money holder between all of our transactions. So there's the client, there's the financial advisor, Sound Financial Group, and there's whatever investments the money is in. And then in the middle of those three is the custodian. That's the third party hired to send everybody statements to know what's going on behind the scenes and make sure what we think is happening is in fact happening.
And then one other that just occurs internal to Sound Financial Group is when clients ask for transfers, we require, if anything looks less than normal, we require a phone call to be able to finish those transfers, as well as we have all kinds of fun with these poor spearfishing expeditions that go on in our email accounts. Cory, I had 1 second left. Don't ring the buzzer on me.
No, you're good. You're good.
Let's see. You go ahead.
Yeah. Paul, do you contact your clients before making changes in their portfolio?
Yes. Number 15, Cory. What will happen to your clients if something happens to you? And let's just say, for the record, after Cory's clients finish the appropriate 7 days of mourning, where they stay home with, some sort of covering to their face, where their friends visit them.
Jordan, you can start the clock on this question. That's fine. Yeah. So this is a reason why we have a team. There are many financial advisors that look for the freedom of going it alone. They want to be on their own, do what they want, when they want. And Paul and I both gave up some autonomy by partnering together, and additional autonomy was given up by adding folks to our team that depend on us being in a certain place at a certain time for certain meetings. But what that means is that we have the freedom to not always be the one person answering every question. So if it's not me, it's Paul or Miranda or Jeff or Jackie or Beth answering your question. And that's really the answer. Something happens to me or to Paul, to your primary advisor, we've got several team members right behind them to pick up that slack and keep running like nothing ever happened. At least as far as your financial future is concerned, you're still going to be going through mourning, but that's a different question. Paul,
nice job.
Number 16.
2.5 seconds left.
Thank you. Can you describe your investing philosophy?
You bet. Simply put, in the general markets and most advice that's offered to clients comes in the form of actively managed mutual funds. Now, we've talked about this a lot on the show, but simply put, active managers tend not to outperform the indexes they're being compared to, and they do so with higher trading costs and higher management fees than are necessarily necessary for those clients. As a result, we embrace what we refer to as a passive structured investing model, where we help clients make sure they're academically allocated and globally diversified. And for those of you that are super interested in our philosophy there, you can get that in detail in what is a 6-part series called The Illusions of Investing, starting at episode 163. Cory, what is the best and worst financial decision you've ever made?
Ooh. So the best financial decision I've ever made, and I'm going to try not to get choked up here, is partnering with this guy that you also see on the screen. And if you've ever heard us speak in an event, if I've ever introduced him, you know that when we first met, I was already a financial advisor working somewhere else, and I discovered some things through our conversations that I wasn't doing for my own family's future that were important, that Paul helped me realize, well, I'm probably not doing it for your clients either. And so it became a moral imperative for us to partner up. And that just led to a whole cascading series of events and habits and practices on being a more financially responsible human. Worst financial decision I ever made is the second that I had success in this business, I bought way too much car than I should have. And I was in an environment that no one ever asked me, like, is that an appropriate amount of your income to spend? It was just like, hey, nice car, you must be doing well. And the answer is no. Number 18, Paul, what are my all-in costs?
I love this question. I think, frankly, most of the American public is not cost conscious enough with their investing. But what I encourage you to do is that what people do all too often is say, what are my all-in costs in working with you? And they're not thinking about what are the all-in costs of me doing what I'm doing right now. Now, in that, I don't just mean the investment management fees. But one thing we do, and why we have an alignment meeting with clients, if they find our philosophy of interest and that we may be able to be of significant help to them, they apply to become a client. We assess that application based upon will we be of significant enough help to have somebody commit the financial and time resources necessary to go through our process. In doing that, we're constantly looking at what are the costs and impacts of their current decision. So maybe you're paying less in asset management fees, but missing out on your ability to do Roth IRA. Or you're paying less in asset management fees, but you're not carrying basis from old ineffective products to your future that would diminish your taxes over time. Cory. What are your qualifications, Cory? This has been my question. I slipped this one in. I have been wondering this for years. Cory, number 19, what are your qualifications?
So, we've already talked about some of the designations that we've got and the training that we've done. And Paul and I both have, a lot of years. There's a lot of years of total experience in our firm. But I'm going to throw out that really doesn't matter. Meaning, what matters more as a qualification is how we can show you that we've brought independent research and independent math, maybe irrefutable math, if you want to believe in the numbers that strongly, to the table to say, here is the background and the research on why this matters. And if it wouldn't matter if we had 30 years in the business or 1 month, the math has not changed in thousands of years. So if we're bringing that math to the table correctly to help you understand what's happening, that you can get it in a way you never have before, then that's the only qualification that really matters.
Love that.
20, what asset allocation will you use?
Depends on your aims. Depends on how much volatility is appropriate for you, and it depends on other assets. I'm going to give a very quick example. If you're somebody that has a government pension that's delivering you $80,000 a year and you have $2 million of investments, the appropriate portfolio for you will be very different than somebody else of the same age with the exact same $2 million of investments with no pension. Like that, those are very, very different scenarios. And to think that it comes down to a formula, and by the way, it's not anybody's fault if it feels like that should be formulaic as to what asset allocation based on somebody's age. That is what the financial media has taught us in soundbite financial advice that is floating around the marketplace all the time. Hence why we bring you this long-form content to be able to increase your financial literacy. Cory, number 21, how will our relationship work?
So our first step with every new potential relationship is what we call our alignment conversation, where we get together to learn about each other and our background of philosophy on money. And so first and foremost in that meeting, we want to learn about you, not your money. So it's not a meeting where we're going to ask you to open the financial kimono, show us your balance sheet or statements. We understand more about you, your family, your life, and aims, and tell you a little bit more about our process and how it works. If we have some meeting of the minds on that conversation, then you can apply to become a client, which is filling out a 20-minute assessment form to give us some high-level numbers at this point, come back in a second meeting so that we can assess if we have an offer to make you. And we think that an offer is ethical to make if we can assess that it would cost you more not to work with us this year than to work with us. Meaning, can we demonstrate real dollars that we can put back on your balance sheet to offset any of the costs that it would take for us to engage?
Wow, that was down to the wire.
I'm
Cory, you
impressed.
at a 10th of a second.
I'm not sure how I pulled that one out. Paul, number 22, what investment benchmarks do you use?
That's a great question. It's a very simple benchmark that matches to the portfolios that we utilize that are also academically allocated, globally diversified. Typical benchmarks that we use do not have the value, small cap, or profitability tilt as deeply as we use those tilts, which if you want more information on that, you can listen to the Illusions of Investing 6-part series. We're not hiding the ball. We just tell you exactly the way we think about this stuff. And now we have well over 170 episodes to continue to demonstrate that. Cory, number 23, what tax hit do I face if I invest with you?
So with every client, we're of course looking to minimize taxes, but it's not just making it the best version of the worst news you'll get this year. It's saying, how can we make sure that taxes are as minimal of an impact as possible over the rest of your life and the outcomes that you want? So the answer is, it's not about if you invest with us, it's maybe if you don't invest with us. Every account has different tax implications. So that's another thing that we need to learn a little bit more about you to answer specifically. Paul, number 24, who's your custodian?
So it depends on the situation and the client. The two custodians we use now are TD Ameritrade and Fidelity. Cory, actual question, guys. We did not make these up. These were emailed to us. Can you, and by the way, I also understand why somebody's asking this, because everybody's future is and does feel life or death to them. Can you guarantee success?
So no advisor can guarantee success. And at best, some products can guarantee a certain financial outcome or a certain rate of return over time. But whether that or not that leads to the success of your financial plan in your life is a much more complicated question. And there's too many variables to be able to guarantee that. Item two is that, again, what's important question is, what does success mean to you? And we would need to find out more about that to have a question about how to point you in the right direction of success. Paul, 26, what happens if we terminate the contract?
So it depends on what type of engagement we have. If we've engaged you in our wealth design build process, we may have charged between $5,000 and $15,000 up front for that first year of our work together, or what we call building the design phase. Now, we are the first firm ever to be approved by the state of Washington to be able to refund that fee entirely in the first 6 months for any subjective reason a client could come up with. There's just a federal statute. It cannot be for investment performance reasons. So that's not our fault. That's a federal thing. But literally, you could say, I've decided that I don't like that Paul has a beard and that Cory doesn't. And so either one of you needs to shave or both of you need to grow a beard. And for that reason, I want a full refund. That's totally fine. And if we terminate the contract, we hold all of your assets in an account that those could easily be transferred to another custodian or fiduciary without taxes. Cory, number 27, what is your payment structure?
So I think we've answered pieces of this in different questions, including Paul and just his last answer about we can do a consulting fee up front. We can also have asset under management accounts or specific products for clients. So any other questions on that, please follow up with us and we'd be happy to talk more. Paul, 28, why should I hire you over other consultants?
Well, I would start with, and this is, I mean this to come across as kindly as I can, but we've not made you an offer yet. We don't know enough about you to know if it's ethical to make you an offer yet. But I would also say this shines some light on just some decision making that a lot of people make with their finances. And part of the concern is, and we've gotten a little bit of pushback even from, say, certain centers of influence, we initially tell them that clients have to apply to become a client. And they say, well, it really seems like you're putting a lot of risk on the client, or that why would you put that hurdle between you and a piece of new business and all that? And we just simply answer, shouldn't you worry if it does not feel like that advisor is interviewing you and trying to screen you out? Because that means your advisor doesn't have those systems or processes in there. And that may or may not be the reason you want to be the person you want to be coupled to for decades if they didn't intentionally select you. I can't believe that buzzer hit. I went slightly over.
I was just so into it. I was just so into the question. Like I didn't even care about the buzzer. I literally didn't even hear it.
Number 29. Cory, will you pick up your phone when called?
So if the first answer is I don't know, and it's a very good chance that I won't be able to answer the phone the second it rings every time. And if you did have an advisor that could make that claim every time, then maybe they don't have a lot going on and they're not someone that you want to work with. But here's what I can say is that any call, any email, it's very fair to assume that you'll get a response from our team same day helping to answer your concern, which I think will take care of you just the same.
And I would add one to that.
Yeah.
Is during this time of COVID-19 and the economic volatility that we're all facing, we've actually gone out of our way to be in active communication with every client that we can reach out to help them know that we're not hiding under our desks during all this, but want to be in communication and relationship with them to add value to their investing and some solace with some grounded and accurate thinking.
Question 30. who should I contact when you're not available? And can I have their name and phone number?
As soon as anybody engages us as a client, they end up with a full list of our team. Anytime anybody's out of the office, if an email hits their inbox, you get a reply with everybody and the types of things that they can help you with in our firm. So we welcome that. And you can check out our website. You'll have everybody's contact information there as well if you need it for some reason earlier than we would engage. So with that ends these 30 questions. We only broke our time limit twice. We hope we kept this a fun and interesting episode for all of you. And don't hesitate. You could send this to somebody else if you think that they're in the midst of making a financial advisory decision, and this is the kind of disclosures you'd like to see. We're going to also paste all of these questions down in the description. So if you wanted to see what another advisor says when you ask them this many questions and how they respond, are they willing to make a video? Are they willing to put all of their answers in ever recorded, never going away internet domain? That might be a good question as to whether or not that would be the advisor to work with also, because I would venture that many of them would have a difficult time getting that letter past their compliance departments, simply because there's so many answers we just gave today that light people up, worry about liability and everything else, especially from big box financial retail. Cory, anything else before we wrap this episode?
No, this was a lot of fun. And as always, we hope that this episode has contributed to you being able to design and build a good life.
Hey, that's my line.
I was going to say.
Hope you enjoyed watching that video, tuning in. We love having you guys here. Don't forget to like that video, subscribe, and hit the alert bell. But by the way, if you just have questions and you want to dig in and learn a little more, go ahead and email us at info@sfgwa.com. Put yourself in the position to have a 15-minute phone call. I mean, come on. Can your current plans withstand a second opinion? If not, that might be the very reason to reach out.